Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We're taking a look at this morning's action. Let's go take a quick peek at what's going on in some of our main futures contracts. So, by the way, when you start off your trading day, and like a lot of us, we're probably trading options on stocks or options on indices or ETFs. And, the bell rings at 9:30. This is true. But there's a lot that we can glean from pre-market action. So pre-market action is what? It's something else is open. There's another financial center cranking away. So I don't like to think of it as just anything before 9:30 and anything after 4 o'clock doesn't matter. We know that many futures contracts trade nearly 23 hours a day. It's just another financial center's opinion. So what are we inheriting by the time we get to 9:30? We're, of course, inheriting the Asian session open and close, the European Open, the UK Open, and then that 2.5 hour window into the US Open, right? So by the time we get to 9:30, heck, even 9 o'clock, like it is right now, by the time we get here, we've already seen, especially if you look at the intraday time frame, whether you want to consider it the Globex session, if you just want to consider it pre-market, whatever it is, we've already seen a lot of action. So if you take a look at things from about 8 p.m. Monday to now, right, about 9 a.m. Tuesday, you can see, okay, Asian session meandered lower. Take a look at that significant bounce. What was that? So while the Asian session closed, and then 2 hours after the European Open and 1 hour after the UK Open, what started to happen? So since about 4 a.m. when the Asian session closed, we've been moving higher. The thing that I'll look at after 4 is what do we do at 7 o'clock? So by the time we get here, we can see that we've been all over the place, all right? We've been a little bit down, we've been sharply up. And the easiest thing to do is look at a couple different lines in the sand, right? This is my typical prep before the bell even rings. And you'll notice that a lot of these levels I already have automated support and resistance at. So there's your high, right? If you want to think of your pre-market high, it's up around 56.18 on the S&P. If you want to think about a pre-market low, it's around 55.89. The previous session close, which is that dashed line cutting across the chart right here, that's yesterday's close. That's really the equator to a certain degree. Are we bullish or bearish on the open? Are we up or down from yesterday's close? You can see we're marginally up. So my little label here, previous session close, says, hey, 56.08 and a quarter was where we closed, and we're 0.01, 0.02 above it. So those are different things we'll look at. And then I've got levels that I'll be using for entry, like the hourly price movement range, which is a historical volatility support and resistance zone, the green and the red. So there's a lot that I can figure out. I could even look at whether or not we've been operating within normal volatility for that time of day before the bell even rings. So our price action respecting the red and green range, or is it way outside of it? Is it way inside of it? So we have a really good idea of behavior well before the bell. We know the bell brings its own psychology, right? We could see a big candle selling, a big candle buying, so I would say the first 20 to 30 minutes is largely considered the clearing period or the clearing range. The same thing. So the clearing range is the high low. The clearing period is that first 20 or 30 minutes. It's going to behoove a lot of traders, especially if you're brand new to day trading, just give the market a beat, right? Let something that opens and closes dramatically, like the stock market, have a second to catch up on all the things that have happened that could not really be responded to, including earnings that happen after the bell. Not in a broad way, right? It's not like everyone's going to have access or even trade stocks and stock options after the bell, right? So you let all that stuff sort of settle. And then as the dust settles, you say, okay, this is what the landscape actually looks like. It's like a magician right at the bell doing one of those smoke bomb things, and you really don't know what's happening, right? And then when it fades away, you say, oh, there was the magic trick. So sometimes it makes sense to wait for that smoke to clear and then ultimately see what the market wants to do. So those are just some things. I figured I'd spend a few minutes talking about, hey, what can we do before the bell? What can we do after the bell to help us get an edge on the morning? I'll give you an example. Yesterday, it's been a tricky day trading environment. So yesterday we had 3-day trades, right? And I'm going to tell you, one of them was basically break even. We got into an Amazon day trade yesterday where I bought the options for $3.35 or $335. Now think about it. If you're trading a $300-ish option, how many of these could you buy, right? This is a scalable mindset, not a $3,000 option, but a $300 option. I'd rather have 10 units of $300 things than 1 unit of a $3,000 thing, right? So that one ended up being break even. We took a shot at a bounce in Amazon, and it just basically came back to break even. All right, so then I had a loss. We played the Russell. So I bought some options in the Russell at $2.30. We had a tighter stop on that because Russell sunk down through this orange line, and that told us, hey, this might go higher eventually, because that was my play. But once we got through that equator, the journey to the target could be untenable. I'm not going to add, I'm not going to do all sorts of flailing in an effort to make the trade work. I'd rather just go ahead and take a tiny loss and move on. And I'm glad that I did that, right? So I took a 15% stop loss on premium paid on the Russell. All right, then we also took the SPY. All right, so this is why it's so important to manage your trades and think about a scalable mindset. We bought SPY for $1.35, $135. And so now, how many $135 things could you buy? 10, 20? Maybe some of you are saying, Rog, I can buy 3. No problem. Scalable, right? We took it to $1.98, from $1.95 to $1.98, then to $2.75. So now I'm taking this $1.35 thing for $1.40 per contract, right? Always think in dollars per contracts, or as I like to say, percentages don't pay the power bill, right? And then we finally closed it out at 2, right? That was the trade. So had I been flailing with IWM, or had I been kind of flailing with Amazon and not keeping those 2 losses small, or one was basically break even, I never would have had given SPY the chance to grow the account. So think about that. That's what we did yesterday. And these are a little bit of insight into the kind of things we look at before the bell for our day trading. All right. So with that being said, as always, if you have any questions, feel free to type them in. And good morning. Good morning. All right. So I hope that was a little bit of insight into some of the stuff we do in the Mastery in the Morning. We do that for about an hour. I don't want to day trade all day. Stamina. I don't think the brain is wired to operate with that type of approach all day long, right? So for me, I find the best follow through and the best setups are going to be in that first hour of the day. And on those days that we have those kind of grinding higher or grinding lower days, right? A lot of the best setups are going to be before we get to 10:30. All right. Okay. So with that being said, Eddie says, good point on scalability. Yeah. I think I use that because I have a lot of traders that will come. Thank you, Eddie. I appreciate that. A lot of traders that'll come to me and say, Rog, I have a small account. I have other traders that'll come to tell me that, Rog, I've got a 7-figure account, right? Here's the thing that blows all of their minds. The trading approach is exactly the same. Now, on the smaller account size, some trades may not be within budget. So you have to have a process, right? For that. Some trades might be just too expensive. We all have a budget in life, right? Now, on the other side, a very, very large account that wants to move a lot of size, some options, some stocks are simply not liquid enough. So each extreme, and I find most traders are not at the extreme. They're either thinking their accounts are much smaller than maybe they really are. And traders who are trading very, very large accounts, again, that's also an extreme. So we tend to, for whatever reason, as human beings, sort of categorize ourselves at these extremes. The fact of the matter is, most traders are trading with accounts under 20,000. Some of them have accounts over, but you'd be surprised how many traders have small-ish accounts. All right. So now pattern day trading rule is an issue. How many spreads, call credit, put credit, butterflies, verticals, how many spreads can you do with pattern day trading rule? Not many. So that's the first thing that traders under 25,000 run into. Rock, I can't put that many trades on a week. Exactly. So scalability is a lot of things wrapped into one. How do I get the most from my account size? How do I not pretend like I'm a 7-figure SPX trader, right? Get over it, right? And how do I not act like I'm trading a far smaller account than I have? If you've got a $20,000 account and that $1.35 SPY, you should be able to trade quite a few lots of that. So when we take a trade like that for, $1.45, it's not that unrealistic to say, could I buy maybe $1,500 worth of options and have maybe 11, 12 of these things, maybe even just 10? And that's a $1,400 day trade using SPY options, not even anything crazier than that. So yeah, scalability is a lot of things wrapped into one, but the idea is to work with what's real. I think a lot of traders have the same habit that a lot of people who have clothes in their closet that they know one day they want to fit into and they leave them there. One day I'm going to have this size account. Great. But trade where you are now. Do what you can with what you have where you are. And then eventually, you can be. But a lot of traders start to play Halloween all year long and pretend there's something they're not. Oh, I'm going to act like a hedge fund. I'm going to act like that. No, it just doesn't get you where you want to go, but you can get there, right? But thank you. I appreciate that, Eddie. What's my thought on XLB? So basic materials. All right, let's take a look at basic materials. For those of you that have never looked at basic materials, one of the things you'll notice, and we put this in the top tier outlook yesterday, is it's been on the move. It's on the plus side of the month to date, and these are names like Sherwin-Williams, Freeport McMoran, Nucor, Dow Chemicals, Newmont. It's a very quirky group. Newmont Mining, CTVA, PPG Paints. So if I look at XLB, a lot of times this can often move with things like ITB and XHB. So home builders, home construction, you'll see there's an odd kind of overlap there. Here's what I will say on behalf of XLB. Is it above the equator? Yes. Is it in chop? Also yes. Would I call it bullish chop? I would call it bullish chop barely, because we've got the last 6, 7 candles have been green, and those are bullish candles. If the green meets the gray, David, if the green meets the gray, I'd be open to it. But please remember, if you're looking at XLB and a lot of these ETFs, they're not always super liquid. Now, this one is really liquid at the 92 strike, the 91 strike, and anything below 91 is just crickets and tumbleweeds on the call side. So what you've got here are a lot of out of the money calls that have been sold and bought. We don't want to go out of the money on these. They're practically worthless. You've got 17,000 open interest at the 94s, and these things are trading about 35 cents. So be really careful with that. However, if what you don't have in the XLB, if you take a look at, say, heavily weighted stocks within it, you might be able to find a stock that has the liquidity and better structure, David. So this is when we say, hey, thank you, sector, for getting my attention. And now I have to use an individual stock proxy, preferably one that's heavily weighted, to trade XLB, right? So sometimes you're going to notice, unless you're trading shares, in which case that doesn't count. And these are little things that we go through summer school. One of the things we do July and August, which are oftentimes considered the doldrums of the trading year, we go through little tidbits like this. We put out, in the Sector Secrets Mastery, I'll put out short 1, 2, 5-minute videos and say, hey, look, these are those little nuances. Here are little lessons that we saw from today. Here are little lessons on what a normal range versus an abnormal range looks like. Here are little lessons on the pullback that we saw into OpX. How many times have we seen that? Is that the new normal or is it not? So we do a lot of these things over summer. And when you get these little nuances and you're able to kind of log them away in your mind and say, oh, I've seen that before. I have an answer to that problem. When you go into the fall trading season, I've heard that summer is separation season, and I love that. Well, folks are phoning it in. I'm all for folks taking vacations, but, I'm not a wine spritzer by the pool kind of gal. What are those little things that we can gain an edge on in July and August and still go enjoy our lives? Let's face it, trading doesn't have to take up all day, every day. But, what are those little things that we can do and little things that we can notice as we go into the fall trading season, when we get the election, when we get the likely the first set of rate cuts, September, November, December. So if you're thinking, yeah, Rog, I'd like to engage in a little separation season and, see what I can do to become better over the summer. We call it summer school, but the Trish boss kind of laughed and said, Rog, summer school? Since when is that a good thing? But it is a good thing in the mastery. Okay. All right. Let's go take a look at what's going on with the NASDAQ here this morning and the Dow. NAS is still kind of moving sideways after that red candle. It's still stuck in a bit of a range. We do have major earnings coming out this week. We got Google this week, got Tesla this week for the NAS. So it wouldn't surprise me that we kind of find a range and stay in there before these major impacting stocks are released. The Dow is still something it's up from, as you can see here, it's up from the sell-off on the 19th. On Monday, it kind of found a little bit of support. I'd like to see it continue to climb from that pullback into the daily price movement range. I'm still long DIA calls. Another place to keep an eye on would be consumer staples. Look, when the broader averages and tech and some of these things start to feel like I'm not sure what happens next, whether that's confusion, whether that's fear, whether that's hesitation, all the things that are the opposite of the confidence of just buy everything. A lot of times staples and even utilities, because they're sort of the people call them defensives. To me, folks like to hide out here, right? It makes sense. This is Walmart. This is Costco. This is Procter and Gamble. So when you see trends in some of these places, these are things that I like to try to take advantage of as we see trends in certain things like Walmart. And if you've not looked at consumer staples and if you've not looked at utilities, please do, because a lot of times when the what seems to be hitting the fan in the broader averages, especially S&P and NASDAQ, sometimes it's staples and utilities that get a lot of attention. All right. So that's something to keep in mind as well. All right. What other questions do we have here before we wrap up? For the SPY, David, I don't do spreads. No, I don't want to overcomplicate something as, look, if we're day trading, thank you for the question, David. If I'm day trading, first of all, let me rewind. I got a couple of minutes here. Thank you for the question, David. So first of all, if I'm going to be day trading SPY, I'm going to be doing it on a 5-minute chart, not a tick chart, not a 1-minute chart. We're looking at a 5-minute chart. So the structure, the support, the resistance are coming from the 5. The second thing is I'm actually going to look at the S&P futures, because unlike the SPY, which really isn't participated in a broad way before 9:30, I've already got a running start. And the running start isn't just price. My indicators already have data with volume and participation. So I'm getting a running start not only in price, I'm getting a running start in the calculation of my indicators. So at the bell, I can make some decisions. The next thing is when I'm going to buy calls. First of all, let's go back to 25,000. Can you imagine if I put on 1 or 2 spreads or 3 spreads every day? There's no way someone with the limitation pattern day trading rule could keep up. And that's something that a lot of traders have to deal with. We have a lot of traders here at Simpler. And if all of them are putting out different spreads every day, you've got to have an account large enough to not be limited by the pattern day trading rule. That's an issue, right? So I don't do spreads for any number of reasons. One, I think I'd rather just have a stop loss, right? So I don't need to sort of have a trade with a hedge built in. I'm not going to trade options that are so expensive that I need the financial price offset, right? So for a lot of traders, they're putting on spreads because just to buy, for example, SPX, it's so darn expensive, it's got to be some kind of spread. I got to offset the cost of this thing, which is also to say offset the risk. So for me, I'd rather buy something that I don't have any of those things to deal with, right? And then that frees me up to just get really focused on a long call, long put, and play a directional debit. And that's the way I operate, right? That's the way I like to focus on my entries, long calls, long puts. And, if anybody out there says, but Rog, I hear that if you're not selling premium, you can't win. We just prove that almost every darn day and have for many years. If anyone thinks that if long calls and long puts don't work, and there's a lot of folks running around saying that, the truth of the matter is it's all timing. Spreads lose too. Hey, when we talk about most options expiring worthless, it's true. That's, people say, well, writing premium is the way to go because most options expire worthless. But if your timing is poor on writing the premium, you're not going to win either, right? So, there's a lot of things out there that get repeated that aren't necessarily true. And one of them is that you can't do this with long calls, long puts. Trading is timing, and it all requires it. Yeah. All right. So if y'all want to learn more about what I'm doing, you can come check out what we're doing in the Sector Secrets Mastery. That's sectorsecrets.com. I'll be in the Simpler Central room as well today at 10:30. All right, gang. Be good to each other. I'll talk with you soon. Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right. Hope everyone is having a good morning. Let's get to it. Yesterday I was talking about this. I was talking about y'all in Charts and Coffee, as many of you probably know since you were there, hopefully. We had 3 day trades yesterday. One was a flat out loser, IWM. One was pretty much break even, Amazon. And then one went for $1.45, right? And if I were not willing to cut my losses and tighten up stops, there's no way SPY could go on to be, right, a positive influence on my account, right? So let's just keep that in mind. And then today we talked about giving our day trades until 10 before we pull the trigger on trade. And the reason for that has been just the fairly consistent, irritatingly consistent number of V tops and V bottoms that we've had. I'm still on YouTube. Oh, am I? I don't see how. Okay, hang on. Give me 1 sec. Hi, YouTubers. All right, hang on. Vivaldi, stop sharing. I was streaming my desktop? Oh, how weird. Okay, give me 1 sec.